Good day, YouTube. My name is Colin, and today we're going to go over 3 stocks that I am most excited about for November 2017. That's today's episode of Financial Success. Okay, so as you may recall, my 3 picks last month were Delta Airlines, Google, and eBay. So let's go ahead and see how they performed throughout the month.
Okay, so this graph is going to reflect all 3 stocks. We have the green line, which is going to show Delta. We have the orange line, which shows eBay, and the blue line, which shows Google. As you can see, the green line there is Delta, and around the 2nd or the 3rd, we shot up and ended the month up pretty well. Same goes for Google. Google's actually a little bit higher at the posting of this video because I made this graph right as they announced earnings, so the stock shot up. And the orange there, eBay, we actually started out well at the end of last month and the beginning of October, but halfway through the month ended up going down after they report earnings. So 2 of them are up, and our 1 stock, eBay, is down.
Okay, so let's talk about what happened. First, we got Delta. Now, Delta shot up, as you saw in the graph. They reported earnings and they looked phenomenal, especially considering a lot of the issues they had with fuel costs and a lot of the hurricanes and the stuff down in the South Atlantic, which is where a large part of their domestic business comes out of. So a lot of canceled flights, a lot of canceled travel to that region, but still reported great numbers. So a lot of it came from domestic travel, of course, but then a lot of it also came from the transatlantic. Remember last month's video I talked about how Delta is such a great airline for business travel because it's so reliable and so many people use it to travel for work and for business. And you're seeing the US does so much business with Europe, and you're seeing the European economy grow. So with that, you're seeing more growth in transatlantic flights for Delta. Also, you're seeing great growth on passenger unit revenue. In other words, the amount of revenue that comes from each passenger, 1.9% year-over-year growth. So they're making more money off of each passenger that gets on a Delta flight. But the big reason is, let's be honest, they came in at 1.57 per share, where they were only projected to get 1.52 per share. This was a great beat because you had fuel costs coming up about 8%. You also have Delta is hedged fuel a while back, so they're kind of eating it with that. And when you hedge fuel, sometimes it works out, sometimes it doesn't. Some airlines don't do it, some airlines do it. You know, sometimes it works out, sometimes it doesn't. But even when it doesn't work out, Delta still finds ways to make money. And you had Hurricane Irma, which was tough. And on the conference call, Delta talked about how they even were putting extended flights down to some of those regions where people were expecting hurricanes, trying to help get people out of the area into safety, putting out dirt cheap flights just to help out people in that region get out of Dodge before the storm comes. Stock price is up 3.38%, trailing 3 months of 13.8 over the last 6 months, and up 28.5 over the last 12 months. It did jump about 2% after the earnings came out, and we had a volume after earnings of 6.5 million shares trading hands. So a lot of activity, a lot of excitement from Delta after that earnings report. Next one we had was eBay. Now eBay didn't perform the best. It actually did beat earning expectations for Q3, but it seems to be the biggest reason why the stock went down is because the guidance dropped. One of the reasons given on the conference call was the Korean Thanksgiving. It was extended in Q3, and it's not going to take place, I guess, in the next quarter where it normally takes place. So because of that, that disrupted a lot of the revenue. Another reason was StubHub. StubHub is wholly owned by eBay, and the revenue and the guidance for StubHub was not great. It was pretty disappointing. That was credited to just not having a lot of good events, which is going to happen in that type of business. A little bit more concerning reason given on the call was that they're saying there's some limitations as far as where tickets are allowed to be sold. When I heard that got me a little more worried, because that could be a potential long-term issue for StubHub if they are not allowed to sell tickets in certain venues for certain events. So that's a little more cause for concern. But eBay, not really anything too concerning coming out with that. To me, they're expecting revenue to drop largely because of, like I mentioned, about the Korean Thanksgiving. But all in all, the drop in share price almost just gives you a better entry point if you're looking to get into this stock. Now, Google. You saw in the graph Google was up. Now, Google, I mentioned this. Google is actually up even higher now at the time this video is getting posted, because I actually took a snapshot of that graph right after I listened to the quarterly earnings call. And so the next trading day, as I'm filming this, after hours, it shot up. People were super excited, super impressed with Google's quarter, as they should be. You had the third quarter profit margin of 24%, and this is the highest since the first quarter of 2013. And much of that came, surprisingly, you're still seeing so much revenue and growth coming from the Google search. That's still going to be the Goliath beast of this company, is the Google search, and you're seeing increased year over year revenue coming from ad clicks directly on that Google search platform. You're also seeing growth in YouTube, and a lot of increased viewership on YouTube, increased people getting onto the platform. And this to me is just crazy. They mentioned this in the last quarter and again in this quarter. The average YouTube user watches 1 hour a day of YouTube. It's crazy. It just shows you how big YouTube is. It's the new TV. So a lot of excitement with that. So with all that great news came a great jump in the stock price. So it's even higher than it was in the graph. It's actually jumped 6%, even 6% higher than what it was. So wow, that's actually pretty crazy. That's a 6% jump. Now we're talking about Friday the 27th. So what a great performance, and what a great quarter, and what a great month Google had. So that's the performance of the last 3 stocks. Again, we had good performance out of Delta, up very strong, Google up amazingly strong, and eBay a little bit less impressive. So we won on 2, we lost on 1. Now, what stocks do I like for November of 2017? Well, I thought a little bit about how I wanted to structure this, and as I mentioned, this isn't going to be necessarily 3 stocks that I'm going to tell you to build your portfolio on, or just buy these 3. So I thought about whether or not I should have them in different industries. I may not be so concerned about how diversified all 3 of them are, because it's just going to be 3 stocks that I'm really excited about. So some of them might be in the same industry. I'm not going to let that inhibit my choices for what I pick, but I'm not building a certain portfolio of these 3 stocks. These are just 3 stocks that I'm excited about. So there may be similar industries. I'm going to try not to make it too similar, but I'm not going to worry about it too much. So just putting out that disclaimer. Okay, so let's talk about the 3 that I'm liking for November. First off, we're going to jump right into it with Google. That's right, I still like Google. I love it as much as I did last quarter. Even though the price jumped up, I still think it's a great buy. I talked about last month the PE being stellar, the growth in this business. Even though as big as it is, it's still just growing astronomically. Let's flip around and look at a few graphs about Google.
All right, so first thing we want to look at is the revenue. Google's a big company, but as big as it is, it's still a growth company, which is just kind of crazy to think about, considering how big, just the word Google is. But you're seeing the most recent numbers in 2017 compared to that same quarter in 2016, and we're still seeing that same growth in revenue, and we're seeing this in every other quarter as well. Now, revenue growth is great, but how is that reflecting the bottom line, the other side of the story? And as you can see, that same growth in revenue is also transmitting to growth in net income, or the bottom line for Google. And we're looking at the same numbers, the most recent quarter of 2017 compared to that same quarter in 2016, and we're absolutely seeing that same growth. So Google on all fronts, with the Google search, with the YouTube, and with the other investments, is showing great growth. Now, the next thing I want to point out is the cash, because this is probably one of the most impressive things about Google, is just the astronomical amount of cash on the balance sheet. You're seeing how, the growth in it, and you're nearing 100 billion at this graph. And you'll see in a minute that it's actually crossed that threshold. But as you can see, consistent growth in total cash. Compared to short-term debt, you're what, 3.5 billion? So as you can see, let's go back to total cash, nearing 100 billion compared to the short-term debt of 3.5 billion. And like I said, this is the most recent numbers. You're seeing total cash, cash equivalents, and marketable securities of over $100 billion. That's something that is extremely impressive. That's almost something you want to sit back and marvel at. Just a balance sheet that is that secure with that much cash on hand is just something to be excited about. Now you're looking at the PE. So Google currently trades at a roughly 30 PE, and with this growth, we're looking at the forward PE. So should the stock price not change, we're going to see that PE drop dramatically, moving down to the mid-20s. So definitely a healthy company with a very fair PE.
And actually, to be fair, the PE of Google is actually roughly 38 because since we have such this great explosion in the stock price, but still a healthy PE, still seeing substantial growth, so still a much more favorable forward PE. So loving Google. Go ahead, check it out, consider buying it. Don't take it based off my word. Do your own research, but definitely, I'm telling you, I love this stock. This is definitely a buy in my book. All right, so now my second pick is going to be a new one this month, and that is going to be Facebook. That's right, the social networking Goliath, Facebook. We got the Facebook, which is a main part of their business. They also have Instagram. They got the Messenger app. They got the WhatsApp. So they got all kinds of different things going on with the company. And one of the beautiful things that they do is they utilize their current platform to grow other streams of their business. For example, everybody who has Facebook ends up downloading a Facebook Messenger. And then if you have a Facebook account, you're going to get an Instagram account automatically. So they're already getting you in on their other platforms and getting you using them. Another thing, if you've noticed, they're starting to get into the C2C sales, local sales in your community, similar to like what Craigslist does. But it's just built right into the Facebook app. So now you're using that, and you're already logged into Facebook, and you can just click one little button in the bottom part, and you can scroll through classified listings right in your local area. So it's not like you're out downloading new apps. They're using their current customer base and finding more ways to get them using Facebook and Facebook products and engaging with people in more and more ways. So it's a beautiful thing. Moreover, I just love the numbers. And now let's go ahead, flip around, and look at a few charts that I really want to show you to highlight a few things with Facebook.
So first thing we want to look at with this type of social media platform is the engagement. And you're seeing monthly active users. These are people who log onto the platform, Facebook, about once a month. And you're seeing consistent growth quarter after quarter, which is a great thing to see. And most of that growth, as you can tell, is on a global basis. Here's the daily active users. You're seeing a growth here as well, which is always probably even better because it's the people who log onto the platform every single day and are going to be scrolling through there, clicking on the ads, what have you. So you're not just seeing growth in people signing up, but you're also seeing growth in the use of Facebook. Balance sheet. Now you're not seeing Google numbers, but you're seeing great numbers. And I want you to pay attention to the trend. It's almost exponential the year after year, how much money this company is having on the balance sheet. So that's a fantastic thing to see. Also, revenue. Revenues are growing quarter after quarter. This graph is a little deceiving because quarter four is always the highest, so you're going to see a little peak there every single year. But the overall trend is that the revenues on an annual basis are growing great for Facebook. So just pay attention. So as you can see, like quarter two of 2017 compared to quarter two of 2016, huge growth. Same thing for the bottom line. We're seeing net income, this is in millions, and you're seeing that same growth. So a lot of times a company will have great top line growth, but maybe not bottom line growth. Not the case with Facebook. Facebook's seeing growth, and that growth, like it is in any healthy company, is getting directly reflected in the bottom line. So I'm loving these numbers that I'm seeing with Facebook, both top and bottom line growth. So moving on, how does this equate down to the share price, or rather the earnings per share? I mean, you're seeing great growth there as well. As you can see, the history and the current of 1.32 as according to the latest numbers. So great growth there as well. You're seeing your share of Facebook get more and more value quarter after quarter, and retain earnings. God, this is probably the most impressive thing. Is you're looking at just the bottom line growth, which is the most important number, one of the most important numbers as far as revenue, more important to me than revenue. And you're seeing exponential growth, which is just scary. It's so sharp and so stark. It's just, this company is exploding. As big as it is, as long as it's been around, it's just on fire as far as the money coming in.
So there you have it. The way they're able to build that revenue and build that bottom line, not just the revenue, but the bottom line. It's a crazy thing. I'm definitely going to be buying up a lot of this stock. So there you have it. There's pick number 2. Now, I brought in a new one, so that means that one of the 3 fell off. And I'll just go ahead and break it out right now. The one that I'm not putting on this list is going to be eBay. And the reason I'm taking that off the list, it's not because I think, I was overly disappointed with the quarter or anything like that. I'm more of a long-term investor. I'm not going to just be fluctuated so much by one quarter. Something's disappointing unless I hear something, really that bothers me. But for the most part, not really a quarter-to-quarter type of investor. And I definitely have shares of eBay, and I'm not planning on selling them just because of this quarter. But for the sake of this list, I'm not as ecstatic about this company. eBay is a stock that I just love for the price, and I think that you can get in with a reasonable PE for such a great company, and they are innovating, and I think they will stay relevant. They're getting into the new image search, voice activation type stuff, group listings, so they're gonna get better searching for products. They're working on the image search, which is where you take a picture of, say, your favorite band, and it'll help search for maybe tickets if they have a concert coming in your area, or those types of things. So just a lot of really cool ways to stay updated and current. So I do think they will stay relevant, and I think it's a great stock, but I'm just not as excited about it as I am the other ones. So with all that said, the third one that's going to stay on my list is going to be Delta. And I talked about it before, but Delta is an amazing company, and I think they're the best run airline in the business. Even when fuel prices go up, they still find a way to make great revenue. They're seeing great growth in the individual revenue per flyer. They're seeing more bookings, and you're seeing tremendous growth in Europe. And I talked about last month how Delta is getting so much business travel because they're the best airline as far as reliability, and they have the lowest incidence of things like lost bags, because the last thing you want when you're traveling for some meeting is to be showing up in your pajamas that you flew in because your bag was lost or your flight to be delayed so you missed a meeting. So they're just well suited for business travel. And with all the business growth and the rebound of the European economy, you're seeing more transatlantic flights, which also plays into their business because they offer a lot of great flights between the US and Europe. Now, another thing I really want to touch on is why Delta is the best airline to be investing in and how they are distinguished from other airlines. So let's flip around and take a look at a couple charts.
All right, so we're looking at a couple charts here. The top one is revenue. You're seeing Delta is healthy, but maybe not the best at 2%. However, when you look at the bottom line, regardless of revenue, they are actually bringing in the most money where it counts in terms of net income, and in some cases doubling the competition. So regardless of revenue, Delta's actually making the most money, and that to me just is more evidence to show that they are the best run airline. Now let's just look at the balance sheet. Now, as we talked about in the last video, Delta has a very healthy balance sheet comparative to United and American, much better. Southwest also has a healthy balance sheet, actually a little bit better debt to equity ratio. So both Delta and Southwest have great balance sheets. Of course, Southwest is not making as good of numbers in terms of bottom line, and they're also trading at a much higher multiple. So for a lot of other reasons, I'm not going to like Southwest as much as Delta, but it's important to look at this chart and just see where Delta falls in terms of balance sheet, which is very well.
I'm expecting great things from this company, and I just love the way it's run. I just love the way that they're so shareholder friendly, that they can consistently make money and can consistently pay out dividends to shareholders. I think it's a great thing, and I love it in my portfolio. I want more of it, and I'm excited about it. I think you should be excited about it. I think you should take a look at it yourself and consider buying it if you like it, if as well. So there you have it. There's the 3 stocks. Hope you enjoyed the video. I'd love to hear what you think about them. Go ahead, leave a comment if you thought the video was informational, if you thought or informative, if you thought it was fun, if it was just cool to watch. Feel free to give me a like. Also, feel free to subscribe. I'm trying to get more and more regular videos out dealing with stock market and general finance. Other than that, that's today's episode. Thanks for watching Financial Success.